It's been a year of significant transformation for Banorte. Tell me about the two mergers that have transformed the shape and size of your business.
We merged with IXE Financial Group in April of 2011, allowing us to develop a highly competitive premium and wholesale banking platform and increase our asset base in the banking and broker-dealer business by more than double. Additionally, in January of 2012, we completed the merger of Afore XXI and Afore Banorte in the pension fund management business, creating one of the largest Afores in the Mexican financial system with over $17 billion in assets under management. The results today of both of these mergers have surpassed our expectations. Earnings grew by almost 25% last year, and we are expecting profit growth of a similar level during this year. Our loan portfolio grew by 33% during 2011, well above the industry growth of 16%. We have become one of the fourth largest mutual fund managers in Mexico, with more than $7 billion in funds under management. Also, Banorte IXE is one of the most active and relevant investment banks in the country, continuously ranking as one of the top underwriters in the local league tables for ECM and DCM transactions. We have one of the most advanced platforms for developing the credit card business, with state-of-the-art systems and the most experienced team in the country. In sum, we now have an integrated business model with the necessary platforms and capabilities to be a leading player in the Mexican financial system.
So let's put all that into perspective. Banorte is now a leader in many segments of the market in Mexico.
Yes, that's correct. We have advanced our market shares considerably over the past 12 months. We are the largest distressed asset management unit in the country, the second largest pension fund manager measured by number of accounts, also the second largest mortgage provider, SME lender, bank for financing to states and municipalities, the third largest bank in commercial and consumer banking, ex credit cards, as well as in size of core deposits, branches, and ATM network, among other things. In spite of these advances, our objective is not only to gain more scale, but also to provide the best banking experience to our clients, which is why we have invested in client service systems, adopted quality programs in our branches, and trained our staff to provide better service. It is no coincidence that Banorte IXE has been recognized as one of the top banks in the client service surveys conducted by third parties, and also as one of the top 10 companies in the Best Place to Work Institute.
So what are the highlights from your recent financial results?
Well, our results have been positive to date, demonstrating that Banorte is reaching the targets laid out during the merger with IXE. Our profits grew by 36% on a yearly basis, driven by higher operating income and stable provisioning levels. The cost-to-income ratio improved to 56% from its peak of 58% after the merger, as a result of the synergies that we are obtaining from cost reductions in both institutions. Return on tangible common equity increased to almost 18% from 16% 2 years ago. Deposits increased by 30% and the loan portfolio by 33%. Asset quality continued to improve, with a decline in the past due loan ratio to 1.8%, much lower from the peak of 2.7% registered during the crisis. All the loan portfolio segments show a decline in past due loans. Meanwhile, our capitalization ratios are strengthening and currently stand at 11.6% for Tier 1 and 13.8% for overall capitalization. These results demonstrate that Banorte's solid fundamentals and adequate business strategy are translating into higher profitability levels in spite of a tough international environment.
And this translates into the creation of shareholder value?
Yes, it certainly does. There are two components to this answer. First, in terms of dividend payments, Banorte has been able to increase its dividend payout ratio to 20% of total earnings as a result of its solid profitability, while at the same time retain enough earnings to strengthen its capitalization levels. Additionally, our stock has been the best performing bank stock in Latin America during 2012, with an increase of close to 50%. One good indicator of shareholder value creation is the current share price relative to our secondary offering carried out in 2011. The offering price was 52 pesos, while currently it is above 62 pesos, actually almost close to 65. There are few examples currently of financial institutions that have offered this type of value creation during a period of high volatility and low appetite for bank stocks.
So finally, what's the future outlook for Banorte and indeed the Mexican economy as a whole?
Well, although we remain cautious about the international headwinds, the outlook for Banorte and the Mexican economy is positive. During 2012, the economy should grow 3.7% and around 3.5% to 4% in 2013. Although this rate could be higher if the new government, which takes office in December of this year, achieves some of the structural reforms that are needed in the energy, fiscal, and labor fronts. Additionally, the fundamentals of the economy will remain solid, with balanced public finances, low public debt levels, controlled inflation, and a moderate current account deficit. Exports, consumption, and investment should continue to drive the economy. Banorte will take advantage of this favorable economic environment to consolidate its growth plans. The loan portfolio should continue to expand at double-digit rates, with a higher emphasis in consumer, SME, mortgage, and local government loans. Our network will continue to expand at a rate of 40 to 50 new branches per year, especially to enhance the IXE brand in cities where it has no presence. We will continue to develop products and services to penetrate the segments of the population with little access to banking services, introducing innovative products to enable account openings in the mobile phone and direct person-to-person transfers, among other things. In summary, we will expand our reach to service the financial needs of more Mexicans.